We are opening today's second session with the big theme Sharia FinTech. FinTech 360, Digital Innovation and the Future of Islamic Finance. This session will be moderated by the Deputy Director of Islamic Financial Inclusion, KNEKS, National Committee for Islamic Economy and Finance, Bapak Jamil Abbas. Please welcome Bapak Jamil Abbas.
Bismillahirrahmanirrahim. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Welcome, ladies and gentlemen, to Indonesia FinTech Summit 2020 on this special session, which is Sharia FinTech, where we will discuss about digital innovation and the future of Islamic finance. Alhamdulillah, we are very grateful to Allah Subhanahu wa Ta'ala that during this pandemic, all of us are still in good health, so we all can be here having this webinar, and the most important thing is having this silaturahim. Because all the speakers that we have here is, while they are all certainly great speakers, but actually they are all very good friends of all of us. Now we are a bit behind, so I'm a bit nervous now because we have four great speakers, but only 1 hour, or now which is only 50 minutes. So let me go straight to introducing the great four speakers that we have today. The first one is we have Dr. Muhammad Obaidullah, Lead Research Economist of Islamic Development Bank. And the second speakers we have here is Brother Umar Munshi, the Managing Director of co-founder and Ethis Global Group. Then the third one is Brother Mustafa Adil, Head of Islamic Finance from Refinitiv. And last but not least, we have Brother Matthew Martin, CEO of Blossom Finance. Assalamualaikum from us here in Indonesia to all these speakers.
Waalaikumsalam.
Waalaikumsalam.
Yeah, so thank you so much for your willingness to join our session. It is a great pleasure, great honor for us to have all of you here. I mean, previously we have prepared that there will be a lot of interesting discussion during this session. But now we must be very extra careful because we are a bit behind, but we still need to finish it at 2 p.m. in order to have the next session start on time. Yeah, so I would like to start this discussion maybe with Dr. Obaidullah. Yeah, I think every one of us agree that talking about digital innovation and especially fintech, we start to see it since the last 3 years. So could you please share your view about the progress of Islamic finance in the last 2 or 3 years, especially in relation to the digital innovation? How do you see it? Whether does digital innovation have a positive impact on Islamic finance or actually a negative impact? Maybe Dr. Obaidullah, if you don't mind to start this discussion.
Thank you, brother. Assalamu alaikum wa rahmatullahi wa barakatuh.
Waalaikumsalam, brother.
My co-panelists and all the participants. Regarding your question on the growth of Islamic financial services industry and the role of or to what extent Islamic fintech can be credited as contributing to this growth. Well, as we all know that Islamic finance industry has been steadily growing, and the growth rate has varied. In the initial stages, it had a very steady growth rate of 15% to 20% per year, and then it has slowed down a bit as the industry has matured. Maybe the last 3-4 years, we have seen about 5 to 5.5% growth rate, and the future again is projected to be very. The original projections was very rosy prior to the pandemic, of course. And now all these projections have to be revised, perhaps downwards. But the industry is stable, I must say, and continues to grow. And we are seeing Islamic fintech products or Islamic financial institutions adopting and adapting to these new technologies that are coming in. But at the same time, we must recognize that globally speaking, Islamic fintech is still is a baby industry, I must say. It is yet to really take off in a big way. And even to the Islamic financial services industry, its role is I would say it's still not in the mainstream, and still a lot of things have to be done to mainstream the Islamic fintech sector.
Okay. Yeah, certainly digital innovation does have positive impact on Islamic finance. But on the other hand, conventional finance is also enjoying various digital innovation. So do you think with digital innovation, is the market share of Islamic finance actually increasing or decreasing? Talking about market share in comparison with conventional finance. What do you think about it? Yeah.
Since you're talking about conventional finance, and when we try to compare Islamic finance, the mainstream one, also with the mainstream conventional finance, we still have a lot way to go, miles to go, and we still account for a very small percentage. And though, of course, we take, we are encouraged by the fact that the growth rate is there. It has been growing at a steady rate. At the same time, Islamic fintech, the growth rate in this sector, I must say it is perhaps it doesn't compare very well with the growth rate of the conventional fintech industry, and that's for very good reasons. In fact, whenever there is an innovation coming in, and what we find in the conventional sector, especially when it relates to finance, there is a kind of free play of what we call animal spirit, or as very aptly put by the famous economist John Maynard Keynes, when we are talking about the stock markets in the conventional sector, when the animal spirit is in play and you have a kind of celebration of greed and also speculative action, and this is something that goes with conventional finance. So obviously you are going to look at a phenomenal or a very high rate of initial growth rate, and a lot of new entrants, a lot of mortality also in conventional finance. We don't really bother much about high mortality rates. These are seen to be a kind of rules of the game. But when it comes to Islamic finance and also Islamic fintech, we say that we tend to take a very conservative approach, and in the sense we look at the possibilities where there could be the players could be flouting the Sharia, basic Sharia norms, and that is what can be attributed, and this is a good thing, to slow down the growth and to take a hard look at what the practices. And then wherever there is a possibility of easy money, and we see this ample talk of easy money in the technology space, in the fintech space, when we are talking about conventional finance. But in Islamic finance, the moment we talk about easy money, we suddenly bring in the possibility of very high rampant speculation, which borders on kind of gambling, and therefore, and also we try to see whether there is, people are taking advantage of information asymmetries, which are very gross, very heavy in the fintech industry. There's a huge gap of knowledge. There's a huge gap in skill, and all this could be related to, could be leading to bad practices. So that is why we always take our ulama, our scholars, they always are, reluctant to give a green signal. Of course, the maxim is there that unless something is proven to be, haram, then it's the default rule is that it is halal. But that doesn't apply. We cannot universally apply that only after the horses have bolted the stable that we raise a red flag. No. So it is the job of our Sharia scholars and regulators, and they have been doing that pretty well. They have been looking at the new products of Islamic fintech, and also the fintech, and also what we are now talking about, decentralized finance. Now, what are the possibilities of abuse of the system, or abuse of the people, or the more knowledge, the more skilled people taking advantage of the less knowledge, and so on and so forth. And that is what really kind of slows down the growth of this particular sector. So even if the growth rate is slow, and we just have, according to our some latest estimates, the Islamic fintech perhaps number just about 150, and if you compare that with let's say 20,000 plus fintech firms globally that are there currently, and out of that about 9,000 in US alone, so it is about 0.7%. But I would still not be worried about it, that it is a good thing to really take a hard look at what we are doing. And if it is a new thing, then there's a need to be doubly cautious about it, and also to see that we fully comply with not only with the Sharia, but also with the spirit of the Sharia and the maqasid of Sharia. So these things have to be kept in mind while we move ahead. So that's my concern.
Thank you so much, Dr. Ubaidullah. Now I would like to hear the view of Brother Umar Munshi about what happened with Islamic finance in the last 2 or 3 years, with the same critical question, whether the digital innovation, which are enjoyed by both Islamic finance and conventional finance, managed to increase the market share of Islamic finance or not. So Brother Umar Munshi, please.
All right. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Okay, thank you, Pak Jamil, for the question. And to add on to what Dr. Ubaidullah shared earlier, I think for me personally, I mean, your question is about market share, but for me personally, it's not so much about market share compared to conventional. It's more, my focus will be more on, or what I think is more pertinent or more relevant is on the, how much penetration Islamic finance and Islamic fintech has. We did not compare to conventional, but we need to look at ourselves. How many countries, what percentage of the population has been touched by and have readily available services that are Islamic. And beyond touching or beyond providing services, how much of it has led to a positive impact, right? So I think that is very, very important, right? How many people can access Islamic finance and the outcome of the service that they can access. So I think in terms of the penetration or the spread of Islamic finance, my view remains that there's still so much to be done, and that's why we don't need to worry about the conventional, because the conventional, there's so much growth that can be done without even disturbing the conventional, because there's still so much market gap. So especially in Indonesia and many other countries, Muslim dominant countries with large Muslim populations, Islamic finance is still utilized or used by a very small portion of the population. So I think there has been progress, and the main progress that I see is actually in terms of awareness. But that's always the first step when it comes to progress, right? So when people are aware, people are educated, and I think in Indonesia, KNKS also has done a great job, not because you're talking to me, but because I see it being very prominent and really pushing this forward, for the masses. So Alhamdulillah, I think a lot more Indonesians and a lot more people in other countries as well are more aware of Islamic finance, what's halal and haram. A lot of Muslims now realize that they cannot just blindly take up any financial services without looking into whether it's compliant or not. Where even in my own country, in Singapore, in the past, people had no idea that riba is haram, interest is haram, right? Because it just wasn't available. But today, especially among the young people, probably because of the access to information online, there is that progress. Yeah. So now when the progress is there and the awareness is there, what is most important is, can the services match up to the expectation or to the interest level, the demand? Because once people know, then they will look for it. If they can't find it, or if they find something that is not suitable, then the interest is difficult to be maintained, right? So I think that is where fintech has a very big role to play. Because as much as we hope the big incumbent, existing banks and financial institutions will continue to grow and continue to serve the ummah, but to serve the masses quickly, especially small services for small people, for normal people, that's where fintech has the advantage of being nimble, being fast. Yeah, so that's my view. I think there is momentum building up. I mean, every country, every region is different, but overall, maybe if I need to generalize, I feel the momentum is definitely building up. The interest is building up. The startups are coming up, and although 150 startups or fintech companies is less than 1% of all the fintech companies in the world, I think that the key thing is not the fact that we are smaller than them, is that when we come into this market, we don't, as fintechs, we don't have to figure out everything from scratch, because a lot of things have already been figured out by the conventional players, right? And so we can learn from their mistakes or issues or problems, and also the opportunities. So from there, inshallah, we can grow much faster.
Great point, Brother Umar. Thank you very much. Now let's hear the view of Brother Mustafa Adil. Yeah, so how do you see the progress of Islamic finance in the last 2 and 3 years? Yeah, and agree with the point of Brother Umar. We are not really care about the market share in comparison with conventional finance, but I do care that I see digital innovation, which is happening in both sides, is also making conventional finance more tempting. So how do you see about it, Brother Mustafa?
Assalamu alaikum.
Especially at the global level. Yeah, walaikum salam, brother.
Assalamu alaikum, Brother Jamil, and assalamu alaikum, everyone. Bismillah ar-Rahman ar-Rahim, and thank you so much, Brother Jamil, for that question. Actually, we at Refinitiv, track the growth of the Islamic finance industry quite closely. And as Dr. Ubaidullah mentioned, the growth has declined since the, I would say 2 decades ago, where it was growing at double-digit rates. This last 10 years has been difficult, but still, particularly in the last 3 years, the Islamic finance industry has still grown faster than the conventional industry. If you look at 2019 was a very strong year for the industry. Assets grew up to $2.9 trillion. It was a 14% growth over 2018, and more than twice as fast as the conventional industry, which grew by 6% in 2019. And overall, over the last 3 years, the industry has grown at a rate of about 8%, whereas the conventional industry has grown at 5%. So there is growth coming in Islamic finance, and it is growing faster than the conventional. But when we look at what share of the conventional market we are, it's still very, very small, right? The growth is very incremental. So in 2019, we grew from 1.8% to 1.9%, right? It was a 0.1% increase in our market share compared to conventional across all Islamic finance markets, if you add that up, right? Including the growth we've seen in some of the traditional markets and taking into account some of the new markets that have come in. So compared to the conventional industry, we are still, not in a very dominant position. And I think that, as Brother Omar mentioned, we're not seeing the impact in the same way, or at least historically, we've not been seeing the impact that we would expect to see from the Islamic finance industry. And that's part of the reason why the growth is so incremental. We're not seeing a significant step shift. But I think that, this last year has been very, very interesting. So when we talk about digital innovation, in our role, we speak to a number of Islamic banks. They have had to accelerate their digital innovation programs very, very aggressively. So, that this digital strategy that was in place to be achieved in, say, 5 years was achieved in 9 months, or at least, 70% of it was achieved in 9 months. Significant, capital went towards addressing many of the legacy issues that existed. And there was a strong focus from the very, very top on digital innovation. And that has, seen an impact. When we speak to these institutions, they are having more impact when it comes to financial inclusion. They're able to attract new customers. They're able to develop more customized solutions for those customers. So I think, as we go through, if we stay on this trajectory and don't revert back to the old way of doing things, we will see that continue to grow. And I think another very interesting example of where the broader conventional industry, this is outside fintech obviously, but where the broader Islamic finance industry has been able to play a very critical role is in the area of sukuk. This last 2019 was a record year for sukuk issuance, but 2020 is going to exceed that. It's the only segment of the Islamic banking industry that is going to show significant, more than double-digit growth this year. And the reason for that is because for the first time, governments are utilizing the Sukuk instrument for their recovery packages, for their relief programs, for their stimulus packages in response to the pandemic, right? And I think it's very, very heartening to see that, governments do recognize the role that Islamic finance can play. It's not simply a solution to provide, a limited set of financial inclusion for some small segments of the market. You can utilize it at a national level to be able to tackle some of the economic challenges, some of the inequality challenges, and to address some of the, issues that exist within some of the most vulnerable people within your society. So I'm very heartened to see both in the Middle East and in Southeast Asia, governments extensively utilizing the Sukuk product and which has supported its growth. And I think that, the industry is on the right trajectory. I think if we continue to push with digital innovation, we continue to push with utilizing not just Sukuk, but other instruments as well that are being developed and being championed in different markets. And I know that, Islamic Development Bank does a lot of work on that with various different programs on how to support SMEs in member countries, how to support various other entities, how to bring in Waqf assets within the Islamic finance ecosystem to have it better utilized and more impactful. I think, hopefully we will see a more segmented shift within the industry, help us, cover more ground compared to conventional. And as Umar mentioned, have a more positive impact on the lives of the people we're meant to serve.
Okay, thank you very much, Brother Mustafa. Now it is time for Brother Matthew Martin. Yeah, I know that you are not an Indonesian, but since you have been in Indonesia for many years, we would like to hear your view about the progress of Islamic finance in the last 2 or 3 years, but in Indonesia. Could you share, is there anything interesting that maybe you can share with us about what is happening in Indonesia?
Sure. Bismillah, alhamdulillah, salatu wassalam ala Rasulullah, amma ba'd. Oh, I got my entry music. It's very dramatic. Was I muted?
No, you're very clear. And please also explain whether you think that digital innovation is making it more tempting for the Muslim to use conventional or to use Islamic finance?
Yeah, so this is a fantastic question. So I agree with all the speakers that we shouldn't be comparing overall market size. I mean, ultimately, what we should be focused on is adoption rates and outcomes. Outcomes are really the most critical. 2008 had explosive growth of the financial sector, but for very bad reasons, and it all exploded. Islamic finance was largely insulated from that crash. Didn't have the same growth, but was insulated from a lot of the toxic assets, overexposed in real estate, but nevertheless generally insulated from the crisis. So the thing about Islamic finance versus conventional finance, it's not good enough to have a product that is inferior in multiple dimensions, but Islamic branded. The product needs to be superior in all dimensions or key dimensions for the consumer to adopt that product, right? That's the key. There's an interesting success case of the takaful model, and it's not in a Muslim country. It's in the United States. There's a company called Lemonade. They recently went public on the New York Stock Exchange. They have a market capitalization of $3.5 billion, and they use a takaful model. It's not Islamic branded, and it's not focused on Muslims, but this is a takaful model. Why are they so successful? Because takaful for insurance is a fundamentally superior model for the consumer. So here's an example where just because the product was superior, actually an Islamic model has been very successful in a non-Muslim majority country and even has gone public on the New York Stock Exchange. So I think we can learn a lot from this example. We need to focus on making products that are fundamentally better products and avoiding the traps that the conventional finance offers and differentiating Islamic finance by being clear about the predatory nature of some of those products. Fintech in Indonesia has grown very, very fast. The vast majority of fintech in Indonesia is conventional fintech, and it's basically online loan sharking. charging 1% interest per day. That should have no place in Islamic finance. That kind of predatory lending, we should completely avoid that. And we should be very proud that we're not growing in that space. So I think, this is very key in Indonesia and also in other countries outside of Indonesia, that we focus on making products that have a fundamentally, good economics for the consumer, good outcomes for the consumer, better outcomes overall. If we make a superior product, people will adopt that product. And even non-Muslims may adopt that product as well. But one thing we can be sure of is if the product is fundamentally inferior on with key aspects of the product, regardless if it's halal or not halal, it won't do as well in the marketplace. And so that's really broadly my view on the growth and the adoption. In terms of developments in Indonesia, I think the big focus has been on fintech, which for those dialing in from outside Indonesia, fintech in Indonesia is a specific legal definition. It does not mean fintech in what we say in English. Fintech in English means technology related to financial space. Fintech in Indonesia is a specific financial model. It's a specific contract model or model of finance. It's not a description of technology. It's a description of a regulated financing activity, legally speaking. So I think one interesting trend over the next few years will be the increasing use of what in Indonesia we call techfin, so technology for finance broadly, as well as fintech. So I think that's going to be an important trend because obviously every Islamic financial institution in Indonesia and globally now is basically being forced to accelerate their digital. I think it was Brother Mustafa who mentioned this, basically being forced, something they plan to do over 2 years, do in 9 months, et cetera. So I think that's the key trend we'll see is more use on techfin and focus on the fundamental economics of the product, the fundamental outcomes of the product being superior, and less of a focus on like, well, you should buy. Here's a simple way to think of it. If there's halal food and non-halal food, but the halal food just doesn't taste good, people aren't going to go to that hawker stall, right? People aren't going to go to that warung. If the warung sells bad food, but it's the halal one, they're not going to go there, right? They may go to the one whose halal status is questionable, right? And so that's very important for us to, as Islamic finance practitioners, to keep in mind. We need to be fundamentally better product all around.
Thank you, Brother Matthew. I think while you are still online here, we can maybe you can start our second point of discussion. Certainly, talking about digital innovation, we want digital innovation to make Islamic finance more powerful and especially more impactful. So, do you see? What do you think? Which digital innovation that we need to focus in order to make Islamic finance more powerful and also impactful? Not just, as mentioned by Brother Umar, not just talking about market share, but again, to really make it impactful to the society.
So, yeah, maybe I'll take a slightly more nuanced view. I don't think there's a single technology that's important. I think actually being overly focused on the technology itself can actually hurt. I think what we need to do is we need to use the technology, but focus on being best in class. That means, the delivery of the service might be through an app, but we have to provide the best customer support. We have to provide economics that make sense for the consumer. We have to, provide underwriting that's world-class, that, credit review and credit and risk assessment that's world-class. So I think executing on all the sort of non-tech pieces are equally, if not more important than the tech itself. Look, you don't need to, these days, you don't even need to know how to be a computer programmer or write a single line of code. You can build a technology-enabled product with no coding. I mean, the technology out there is amazing, and a lot of it's free. The key is really how you apply that technology. You have to have operational excellence within that technology. Does that make sense? So, things obviously, using digital as a distribution channel is really key, especially now in the COVID times. but you have to build an operational excellence around that. It's not good enough to have a website where you're, offering people to invest in something if the investment's terrible, right? Or if you're offering credit to small businesses, but the credit terms are really terrible for them. It ultimately doesn't matter about the technology. The technology should work. It should be reliable. It should improve the experience, but you need to build in operational excellence at every stage with that technology. That's what I would say.
Yeah, thank you, Brother Matthew. And now I would like to go to Brother Umar. You really do, I think, what we call walk the talk. When you are talking about impact, and if I'm not mistaken, at this group is not just developing commercial platform, but you have quite a number of interesting social platform. So could you share your experience lately about what happened with, whether, what do you think about this social platform in Islamic finance? Is it doing well, or what would be the challenges to develop that part?
Sure. If you don't mind, I want to just touch on the earlier point that Matthew was talking about. So,
yes, please.
Right. I agree that we need to be best in class, yeah, but maybe also to add a bit of my own perspective in terms of the width, the spread, the types of fintechs. There's so many types of fintech, right? I do think that some types or some forms of fintech is more potentially more relevant and more important for the Muslim world and for Islamic finance. And that is, in maybe two things I can highlight. And of course, I'm a little bit biased because I'm, from a crowdfunding background. But I think crowdfunding is very, very critical and very, very important. And here I also allude to what Matthew mentioned earlier, not the online loan shark kind of approach of just lending money using data, but a productive financing, financing for business, financing to uplift people, financing for education and whatnot. So I think for the Muslim world, for Islamic finance, that is very, very important because this is true participatory finance, meaning the investment or the funds go into a real world activity, and that creates, benefits for society, direct benefits for society. So I think that's very, very important for Islamic finance, relative to maybe other types of fintech that work more with the banking system or the existing forms of finance. And the other thing that I think is very important also for Islamic finance is also with regards to international movement of funds, because the Muslim world is connected. The Muslim world is, I believe, united to some extent, but it's so difficult for us to move money to each other. Yeah, so these are the two forms of fintech that I think are going to be very, very critical for Islamic finance that I wanted to highlight before jumping to your question. Mm-hmm. So your question for social finance, I think Indonesia itself has been, is a very good example. I think Basnas and a lot of the different organizations in Indonesia have done a great job in implementing and adopting fintech. And I was part of a panel last week with Basnas as well. So I'm very, very impressed, and I think and I believe that this needs to be a key focus area, and Indonesia has focused on it quite significantly. And I believe that the learnings and the examples that Indonesia has, if it's implemented in other parts of the Muslim world, it's also potentially
Thank you to the
impact. Yeah, it's also going to have a lot of impact. So social finance, the way I see it, and of course, Dr. Abdullah is one of the top experts in this field, but I feel social finance must always be a part of the system, must always be part of the solution. Islamic finance is not just commercial finance. It has to come together with social finance. And I want to share quickly two initiatives that we've launched or are launching right now. One is a cash wakaf program with the beneficiary of the assets in Indonesia for social housing, inshallah. That's something we're rolling out. And the other one is a Card Hasan program for small businesses, micro SMEs in Malaysia. So both of them, the delivery and the collections of the fund and so on, is all done through digital platforms. Yeah, thank you.
Thank you, Brother Umar. I think Dr. Ubaidullah, if you don't mind, maybe you can explore a bit deeper about the impact of digital innovation on the Islamic social finance landscape, maybe from the experience in Indonesia or any part of the world.
Yeah, in fact, when we talk about impact of digitization or digital innovation, we are, let's say, we are thinking in terms of more in terms of social and economic impact here, not from the standpoint of technology. And so I feel that there is a serious, concern here that I would like to share with you. That with the kind of trend that we are seeing globally, which is towards what we call platformization, which means more and more use of platforms, and they always have the advantage of data. And as we all know that 7 of the top 9 companies in the world, they use some kind of a platform. So if we are looking at in terms of social and economic impact and the different, the variation that is there across countries or across societies in terms of their capabilities and competencies and so on and so forth, it's very important to highlight or underline a kind of strategy that should perhaps be followed. And this is what, perhaps we also as economists, they recommend to most of the developing nations that we should focus more on the areas where the local competencies can be best utilized. For example, there are areas where, and Indonesia is a very excellent example of that, where a lot of work is being done at the interface between what we call agri-tech and fintech. So, and this is where Indonesia has that competitive advantage. And similarly, if you talk about tourism, for example, a lot of local factors, they come into play, and the local knowledge, local competency, local capabilities, they can make a lot of difference. And the kind of trend we are seeing across, across the globe, that just 2 countries, they account for more than 40% of the total market, and this is of course has to be countered at several levels, not just through policies and like the right kind of taxation, right kind of competition policies, and so on and so forth, but also by encouraging local talent, by encouraging creating local competencies, by focusing on sectors where there can be this intersection between a real sector and the financial sector. And that is the real crux of Islamic finance, as we understand. And Islamic economy is, there is always a linkage between the real economy and the financial economy. So moving away from areas which are, we can say, purely in financial economy, where you just have lending-based platforms taking care of a huge part of the overall market. We should move towards areas where there is real creation of wealth, and this creation of wealth is taking place locally. And I just said that we have some very brilliant examples of Indonesian, platforms which are focusing on agriculture, which are focusing on fisheries, and they, there's another. Very recently, I came across a brilliant example from Singapore, where livestock using RFID technology, they are converted into assets, and which can be used as collateral, and again, it opens a whole new area of financing by global financiers, global investors using the decentralized DeFi framework. So we are reaching a stage where the real economy, even a very small part of it, can be linked through technology with the financials which will be spread across the globe. Similarly, coming to social finance, of course, I know there is a huge potential for zakat and awqaf. In the matter of awqaf, as we know, preservation and development, these are the key concerns, and both these concerns can be better addressed with use of technology like blockchain. Similarly, if you are talking about zakat, and we know that there's a lot of issues relating to the attrition of donors, and if you want to see the cost associated with getting a new, let's say, muzakki or a new donor or a new sadaqah donor, that is far more than the cost of retaining an existing client. And if you want to retain your existing client, you can serve always him better, and he is looking forward to better service, better reporting, and better better transparency, and perhaps periodic information about the end use of his funds, where exactly his donation is going to end up. So if technology can, bring in these possibilities. Certainly, the social finance sector is going to take a quantum leap, because that is where we seem to be suffering, which is about trust and confidence. The social finance sector suffers very acutely in some countries, and Indonesia, Malaysia, these are among the more privileged countries to have more stable laws, even dedicated laws for zakat, awqaf, and so on and so forth. But there are many countries where there are no regulations. It is a complete vacuum as far as regulating zakat is concerned. So in such countries, it becomes doubly important to somehow ensure that good practices are followed, with respect to transparency and good governance. And this can be made feasible through through technology. And we have seen this being utilized in Singapore, in Indonesia, in Malaysia, and the rest of the world, rest of the Muslim world. There are many IDB member countries and OIC member countries who still don't have to learn, and they can replicate some of these good practices.
Thank you very much, Dr. Obaidullah. Yes, so now, Brother Mustafa, so do you see any interesting digital innovation which you think that will really have which can make Islamic finance more powerful and more impactful? Maybe from globally, I mean, from any part of the world, which you can share to us in Indonesia.
Of course. Thank you, Brother Jamil. And I think, I definitely agree with what many of the speakers have been saying. From our perspective, we see 4 technologies that we think are going to have a major impact on the Islamic finance industry and, potentially bring it closer to Maqasid al-Sharia, the main principles of Sharia. And, one of them obviously is going to be the P2P or P2B platforms that are being developed. And I think, Omar also mentioned the significance of crowdfunding as well, right? And I think that, this cuts at the very heart of what Islamic finance is meant to be, right? It's meant to be intermediaries between those that have capital and those that need capital across the entire spectrum, all the way from governments through to corporates, through to those that are, socially underprivileged in that ecosystem. And I think that, there's a reason why P2P has been one of the fastest growing segments within financial technology. It's being adopted significantly by financial institutions, and it goes beyond digital channels. It's really about connecting stakeholders in a meaningful manner and keeping them connected to have real positive impact. The other one, I agree very much with what Dr. Obaidullah said, is around blockchain. And blockchain, not from the point of view of crypto assets, but blockchain from the point of view of having distributed decentralized ledgers and information databases. And I think that is very, very significant. Historically, we have always had an issue with using certain Islamic finance contracts that relate to profit and loss sharing. And the reason is because we don't have the type of disclosures, we don't have the type of capability to track businesses, to track transactions. We don't have the capability to track our supply chain, particularly when it grows across geographies. And that is always put both from a Islamic institution perspective, but from a regulator perspective, has made them extra cautious and concerned, and we've steered away from that direction. But I think having decentralized ledgers which can track products, which can track transactions, that create a new level of basically transparency in the industry, and you don't need a team to conduct due diligence, right? The systems and the artificial intelligence algorithms can do that for you. That opens up a mechanism where you can really track the real economy, you can track social finance and help implement that. And I think the other 2 that I would mention that are also very, very significant, one is around big data and artificial intelligence. And I think this is going to be critical to the development and rollout of Islamic finance going forward, right? How we identify our customers, how we map our customers, how we identify what products they need. It cannot simply be about, okay, if you have X amount of collateral, you can receive Y amount of financing, right? We have to be able to leverage information and data to be able to better predict and project the economic value of customers, the economic value of SMEs for businesses. And I think big data and artificial intelligence is going to play a very, very significant role in this area. And lastly, the other technology that I feel works very well is robo-advisory. And this is something that, is relatively simpler, but makes a huge impact in investment tools to the retail level. It cuts the cost for managing investments significantly for financial institutions and brings them to the retail player, so that you don't need to be a high net worth individual or an affluent individual to be able to access investment products. You can do that through very, very small sums at a retail level, and to be able to grow that investment over time if you plan it appropriately. So I think that the advent of robo-advisory in the investment space has been very, very critical. It's going to significantly change the access to these financial solutions where they're there. Now, with all of these technologies, the potential is very significant, but the challenge always comes is how effectively Islamic banks are implementing that, right? And they have a number of issues, the legacy systems that they've invested in, the processes that they've invested in, and you really have to decouple your mindset from these situations, right? A lot of times, Islamic banks or traditional Islamic firms are trying to fit new technology into the legacy system, and that's not going to work. You have to upgrade your infrastructure to be able to do that. Otherwise, the Islamic fintech firms will leave you behind. The fintech firms have their own challenges. It's not to say that, they have a significant advantage. They have their own challenges, but I think both Islamic institutions and fintech firms are, trying to address the same challenge, leveraging technology to address key social issues that should be addressed by the Islamic finance industry more broadly. So I mean, from my perspective, I see it as very, very interesting space to look at right now. I think in the next few years, you will see certain Islamic banks effectively implementing some of these solutions to be able to take their business to a new level. But at the same time, I think you will see a number of fintech firms that have also specialized in some of these specific technologies, being able to roll out their platforms across geographies and have a significant impact with the communities that they operate with.
Yeah, thank you so much, Brother Mustafa. As expected, there are lots of very interesting points from all of you. Unfortunately, we have promised the organizer that we must finish by 2 o'clock. So I guess we better use the third point of discussion as also as a closing statement for you. So this is Indonesia FinTech Summit. So we need where a lot of players, fintech players here. So maybe let's use this closing statement. I mean, with maybe some advice on. Right now, talking about digital innovation, various financial institutions are enjoying it. I mean, banks, microfinance, they are also adopting the latest technology. So maybe with this closing statement, maybe you have some ideas or suggestion how Islamic fintech firm can survive with this situation. I mean, how they should differentiate themselves in order to keep exist. So maybe let's start with Dr. Obaidullah, but since we only have 3 minutes left, maybe 1 minute each, if you don't mind.
Thank you, brother.
For each speaker.
I think the very purpose of innovation is to enhance efficiency. It is to reduce tensions in the economy. So it's not meant for creating new avenues for speculative gains. So I think to the extent this is understood, then I think the Islamic financial institutions, whether they are mainstream institutions or small fintech firms, they should focus on the real sector. They should identify those sectors where they can tie up with the real sector in an effective way, so that Islamic finance is what we understand becomes true Islamic finance, where there's a very strong linkage, and that linkage continues as financing goes on for the expansion of the real sector.
Yeah, thank you, Doctor. So maybe Brother Umar can continue with your closing statement. How Islamic finance, how Islamic fintech firm can survive while the banks are also adopting the latest technology.
Sure. So I think probably you mean those startups or small companies that are going to fintech in Islamic finance.
Actually, Islamic fintech firms is also now competing against a bank, and the bank is also using the latest digital innovation.
Exactly. So I think globally the trend is quite clear that fintechs are taking up as a percentage more share, eating up in a sense some of the business of the banks. But my view is that this is a natural progression where certain services maybe the banks are not able or not willing to provide, and that is where fintech can grow. And in fact, I see a lot of synergy and a lot of collaboration. So if you look at the experiences of the West and in China also, a lot of the big banks can be China. Maybe the fintechs are bigger than the banks now. But yeah, in the Western world, a lot of the banks are investing a lot in fintech. So it's not necessarily a competitor to defeat. I feel in many ways very complementary, and also there's a lot of synergy. Banks will continue to remain relevant. Fintechs are not going to take over the banks because the banks have a role to play. But I think that a lot of the roles that people expect from banks, they're not able to play, and that's where fintech can come in.
Yeah. Thank you, Brother Umar. And Brother Mustafa, your closing statement, please.
Sure. Thank you very much, Brother Jamil. And I completely agree with the sentiments of Dr. Ubaidullah and Brother Omar. I think that, it's a very, very exciting time. And what I would advise the fintech firms is that, for the first time, we're in a situation where, the theory of Islamic finance that we read about that was not practically implementable previously can be implementable by technology. So as long as you have the social purpose, or you have a purpose to promote Islamic finance in line with the principles, I think you would do well. And like Brother Umar mentioned, don't view the banks as competitors per se. They are partners and stakeholders within the broader ecosystem. And I think a partnership model could be very, very successful for a lot of the Islamic fintech firms with Islamic banks. And we have seen that work in different markets successfully as well.
Thank you very much. And last but not least, Brother Matthew Martin, your closing statement.
Yeah, sure. I'll close by saying, don't fall in love with technology, because technology will never love you back. Fall in love with solutions to problems people have, funding the real sector, providing a better experience. That's what we should fall in love with. And technology is just a tool that helps us get along that path. Islamic banks are not going to kill fintechs. Legally and regulatorily speaking, they can't do a lot of the things fintechs can do. And likewise, fintechs can't do a lot of the things Islamic banks can do. So there's enough market share for everyone. We need to focus on providing solutions to real problems for the real sector, making those products the best in class, regardless of Islamic or not Islamic. And that's what we should focus on.
Yeah, Alhamdulillah. Thank you so much, Brother Matthew Martin. Yeah, my apology to the audience that it seems we have no time for Q&A, but I'm sure we learned a lot from these 4 prominent speakers today. Alhamdulillah.
Less music next time, please, to the organizers. Less music, more. It's 12 minutes.
Okay. Yeah, so hope the organizer hear the advice from Matthew. Yeah, so thank you very much to all the speakers, Dr. Ubaidullah, Dr. Umar, Brother Umar Munsi, Brother Mustafa Adil, and Brother Matthew Martin. Thank you so much for sharing very important points, ideas, which I think very useful for all the stakeholders in Islamic finance. And as a moderator, I would like to apologize for any inconvenience, any mistake during this session. Again, thank you very much also to the audience for staying with us. And here we have 134, Alhamdulillah. And again, thank you very much. And I'll return this event to the MC. Assalamualaikum warahmatullahi wabarakatuh.
Wa alaikum salam.
Alaikum
Alaikum
salam.
salam.